Kathy Donnelly, Happy New Year. Welcome back to Face in a different climate and environment
Happy
than
New Year,
last time.
Dale.
Hey,
Thanks for having
Kathy.
me on.
Yeah, great to have you. And market conditions. There wasn't much for you to do last time. I'm predicting that since the low in October, that some things came shifted for you to find some things that have entered into a stage where you might be pulling the trigger and taking positions. Am I right?
Yeah, the market definitely looks better. So I've
Yeah,
definitely taken some action. I mean, we've got the Nasdaq back above the 200-day, which is what
yeah.
I'm showing right now. I mean, it's trying to stay above. We've got three. We're on our third week, so we'll see if it can.
What a January too, huh?
Yeah,
Really?
exactly. Oh, that's right. February 1st.
Yeah.
Oh, we made it through January.
Well, it made it through. I mean, it was like Lazarus,
Right.
especially some of the low floaters and things that have been crushed. A lot of short squeezes I've noticed over the last month. Um,
We still
so
definitely have had a lot of volatility. That is for sure.
yeah, not reflected by the VIX, but definitely huge range days on stocks that could be up 50% in a month is,
Right.
not unusual. So you prepared some type of PowerPoint for us here.
Yeah, just a few things I thought we would
Okay.
highlight today. I wanted to show to start just a comparison of the indices over the last year with the Renaissance IPO ETF, which is the green line here on the bottom. Of course, it's had a much harder time, which for those that may not be aware, I mean, IPOs generally more volatile and can do twice as bad, or if not more, than the indices, which in this
Or
case,
twice as good during
or
bull
yeah,
markets, right?
exactly, right, which is why
Yeah.
they're so fun.
Okay.
And the
All right.
S&P is still doing better than the Nasdaq, which, for the type of growth stocks that I like to watch, and of course the IPOs, which, by definition, I feel like are growth stocks. You know,
Right.
we'd like to see the Nasdaq leading versus the S&P, but take what we can get.
Okay.
But what I wanted to share with people today, and I can't take full credit for this chart, was put together by stockanalysis.com, and actually my co-author Eric Kroll had brought it up uh, to us. But the IPO market recovery can take 1 to 3 years. So even if we have a strong rally this year and we turn around, it still might take the IPOs, 1 to 3 years to kind of catch up, because they don't want to come out in a bad market, right? So they need to make sure, and then they start coming out. And you can see that with these arrows in the previous bear markets and how the numbers for the IPOs went down, and then it took a
Yeah.
while for them to get back up. So just wanted to remind everyone that, so we don't have to be in a hurry, and as soon as that market, there's a little more confidence, we'll start seeing the new companies coming out.
Okay. And that includes SPACs,
Yeah,
which
it
which
does.
weren't there in the prior red arrows,
Right,
right?
exactly,
They
exactly.
they I no one even knew the word.
And SPACs are really not, I don't have a chart on that, but they're, a lot of them have not done so well. So
Yeah.
we'll probably be seeing some more traditional IPOs than SPACs for at least a while
Yeah.
until maybe there's another euphoric
Yeah.
situation like we had. But
Yeah.
I'm definitely
eh,
seeing a lot of
Next
overhead
lifetime.
resistance. Oh, I'm sorry.
Yes.
Go ahead, Dale.
No, that's okay. Some people feel that, that was kind of a generational event, that kind of speculative fervor. But, I know people looking for a melt up. We could have that fervor again. So, a lot of people think that was kind of like a once in a generation thing where, with crypto and SPACs and memes and just, rampant speculation because of the punch bowl and the punch bowl
Right.
being
Yeah.
taken
No, I
away.
agree.
So, punch, he could end up pouring punch back into the bowl in a little while. He's a little uptight right now.
Right.
Don't you?
Exactly.
I wrote a poem, Kathy, about Powell.
You did.
Yeah, the
Well,
first slide.
I'm seeing oh,
Oh, go ahead.
go,
Oh, go ahead.
yeah, I just
Go
want
ahead.
to share with everyone. I mean, if they haven't already noticed, there's a lot of overhead resistance out there because we had a lot of decline in those
Yeah.
growth stocks. And the nature of the market being so volatile, lots of bases on bases, so consolidations on top of consolidations. So, in a way that's good because the ones that are the stronger ones have not gone lower. And because of the volatility, they haven't been able to go higher, but at least they're trying to build something. And then I'm seeing a lot of bottoming bases. So this is the potential. The potential is there. And so I'll go ahead and bring up my stock charts now because I wanted to
Okay.
highlight some of them.
So it's kind of a healing process, both bringing out new IPOs and healing process of IPOs that are already out that are moving sideways. So they've stopped going down, which is the first step, right?
Exactly. And I really like the way you use that analogy of the healing process,
Yes. Yeah. The
and they're
tincture of
just
time.
hold on, right? They
Yeah, it
don't want to
takes
get
time.
exactly. They just want to get better.
Right.
Um, So the best IPO out there, in my opinion, and I have to confess that I have a position in this one, is MobileEye. And this is surprising because, I was just showing you, there's not a lot of strong IPOs. We got a lot of overhead resistance. So it's really surprising to see an IPO like this one doing well comparatively. And this is for those that may not know, this was an IPO many years ago, and then it got bought out by Intel, and then Intel then put it back on the market. And people had to, companies they put their money on the line for this Mobileye. So in this kind of market, that we'd say, well, that's a pretty good sign if they're willing to pony up money for a new IPO in this market. But you can see it's doing all right. Also very volatile. You have this shakeout week here, but a lot of
Do
blue
you have a chart
bars.
on it?
You can't
Yeah,
see
but
my screen?
I see IPOs to watch, but I just see the symbols, not the charts.
I'm so sorry. I don't know why that happened.
I
Okay.
see
I thought I was
four.
sharing my entire desktop. Can you
Oh,
see it
okay.
now?
Yeah, got it.
Okay. Perfect. So yeah, here's mobile right here. So you have a prior run up, a little bit of a
Yeah.
base here. You can see it's also still been volatile, but you see blue bars, which with Market Smith, these are Market Smith charts. Blue bars are up weeks and signs of accumulation. So, and it's, try to break out into new highs last week it did break out into new highs last week when it reported earnings, but came back a little bit in. So we'll see how it does. But I feel like this is the strongest one. I do have a position. We'll see what happens.
Was it able to go in that short of time through all the stages that you like to see before you commit? Due diligence phase, etc.
Yeah, great question. Well, we had a prior run up from this small IPO base. There's an IPO base in here. There it is. Very small. And now, you know, it's kind of too early to say, well, is this going to be a late bloomer? I mean, the potential right now is a late bloomer or a stair stepper, unless it just completely fails. Right now, I would say it's in an IPO advanced phase, which can be short lived, but it could also be a stair stepper. So we'll see. Right
Okay.
now, we've got a clear uptrend until it's not.
Right. Are these weekly candles
These
or
are weekly.
bars? Okay.
Yes. Yes.
All right. Okay.
So let me give you an example of that overhead resistance I was talking about. This is one I've been watching for, well, since it came out, really, 2021. This Toast is a really great company that's helping out the restaurant industry. And I don't know if you've seen them on your receipts when you've gone out to eat, Dale, but I see them all the time. The terminals that the waiters or waitresses bring, if you look at the back, it'll say Toast, or your receipt will say Toast. It'll say pay with
Interesting.
Toast.
Okay.
But it seems like they're really doing a lot to change how restaurants do their business and help them to be more efficient. Now, this came out the end of 2021, and the market wasn't good. It barely broke out of this base and just went down. But now
Yeah.
we've got that sideways action I was talking about. We have a base on base because of the volatility of the market, but we have a lot of this overhead resistance. So, this is definitely that due diligence phase you were just referring to that we talked about in our book, The Life Cycle Trade.
Okay.
But it's going to have a lot of overhead resistance just to get back to what we call the turbulence zone, this prior high over here.
Well, that's a huge move.
That's going to be a huge move, and there's going to be resistance all along the way.
Well, let me
But
ask you this on this.
yeah,
It looks like a rectangle to me, and that's a continue. It could be a continuation formation off the first wave up. So if it starts closing over that resistance, say 23 for a couple days or maybe a week, is that a signal for you?
yeah, absolutely. And we're looking at the same thing. We're just using different terminology.
Okay.
First run up from the bottom. This in the Can Slim terms or Marcus Smith terms, this was a cup. It broke out,
Okay.
failed. Now we've got a consolidation that looks like a square. And so it's trying to get past these highs. And we had prior resistance here. So that's probably going to happen if it's successful all the way up. And it doesn't have earnings, but it has great sales. And like I said, I really like the new, what new that it's doing. And it
It
really
measures 34, just based upon what I see technically, with the low, calling the low 12, and then 23 is a high. You just add 11 points on a breakout over 23 gives you 34.
Yeah.
So
That would make sense to me.
Anyway, nice look.
So we'll
Toast.
see. Toast, yeah, toast.
All
One
right.
to
I
one to
like it.
watch.
Okay.
And my friends and I, we have some for fun. We like to pick stocks for the year. Say, oh, what do we think is going to be the next great stock? And so this is one of mine that my pick for the year. We'll see what happens because it was also my pick last year, and obviously I didn't do so well. So
okay.
We'll see. We'll give it some more time.
It owes you.
It owes me, right? And then another fun one, just to kind of give a different example of what's going on. Yeah, this is On Holding. So this is the shoes. I don't know if you've seen these. Are you a runner, Dale?
I'm a walker.
Okay, you're a walker. Well, you could walk in these. This is a new brand of shoes that's been out for a little while, and they just signed on. So some new athletes, some Ironman athletes that won the world championships to their list of many athletes that they sponsor, but had an IPO base, had that run up, and also declined with the rest of the market at the end of 2021. And here we have a little bit of a run up, but then it undercut that run up. So I like to call this that bottoming base.
Okay.
And this Marcus Smith denotes as one big cup that's 38% deep.
Can I
But I think
call
there's a lot of potential
it
here.
a saucer?
You could
Because you
call it a
need
saucer.
okay, saucer cup. I mean, that's a set, right? You need the cup and put on top of the saucer.
Exactly.
All right. Okay.
You also still have a lot of overhead resistance, but this one has nicer earnings and sales. So, Marcus Smith and IBD, they like to rate their stocks. Composite rating is a good overall rating to use from 0 to 99. This is an 89. So from a fundamentals perspective, you have a lot more going for it than Toast.
Okay, a lot of more relative strength. It's above all the moving averages.
Yes, exactly.
Okay.
But it's probably going to run into resistance here and maybe resistance here, kind of like we were talking about. But another one to watch. So what I'm seeing, as I mentioned in the slides, is there's a lot of setups like this. Some are deeper than others. Some of them are trying to build by that base on base. So the potential's there, but it's always a market question, right, Dale? Is the market going to let these stocks flourish, or are they going to keep holding them down?
Okay. All right. So, although individual issues can march to their own drummer, you're saying that the band still has an effect on performance.
Yeah, I
The whole
definitely
band.
think so. Absolutely.
Okay.
I mean, 75% of the stocks will follow the action in the market.
Okay.
It's the
All
kind of
right.
the mantra that I live by.
So Anthony Konekis is asking, does Kathy monitor IPOs for 1 or 2 hours out? Is that what you're talking about? Hours, Anthony? And he brings up XM, HCP,
Oh,
CFLT as they move from small to mid-size or large companies.
I
Years,
abs
he meant 1 to 2 years out. Okay, he put hours
yeah.
because he trades Forex too. So you're confused, Anthony, but thank you. So what do you have an answer for him?
Yes. Yes, I
Yeah.
do have an answer. I definitely I follow the last 2 to 3 years. The last two to
Okay.
three, like XM definitely is on my radar. I pulled that one up right here. Um,
Wow.
it it had a great gap up bar last week, so it's that's positive off the bottom. I'd like to see it build a constructive base here.
Look at
But
that
again, like
volume.
the others, you're going to have overhead resistance. But this one, 79 composite out of 99, but you've got sales numbers. So this is definitely on my radar, Anthony. Um, he also mentioned HCP. I don't know as much about this company, HashiCorp, but it's starting to go sideways. I don't necessarily see a constructive base here like on ONON, but it is
Okay.
starting to go sideways. And this is that 40-week line that it's
Right.
trying to, solidify itself with. So
Okay.
yeah, definitely on my radar, Anthony. So any stocks, IPOs, 2 to 3 years.
Okay. Um, Anything else you wanted to cover today, Kathy?
No, I just wanted to share. I mean, I had a few other stocks if we wanted to look at them, let me just do one, actually two more really
Okay.
quick. We
Sure.
have the time.
We have time.
I wanted to show Spotify because actually this is to Anthony's point, how far do you go back? I mean,
Yeah.
I'll still watch. This is an IPO from June 2018, had a long institutional due diligence phase, kind of went up, but never really had a lot of progress. But now it has a big base, like ON that we just looked at. And so, the potential can still be there even 6 to 8 years out. I don't necessarily scream for it, but what I scream for is that positive daily action. So like yesterday it reported on earnings over 10%. So that's something will hit my radar, even if it's not an IPO, big moves on volume. And then I'll be like, oh, this is, an IPO from a while ago, but still has that potential. And maybe now is the time, we'll have to see.
Okay.
So Okay, and I did say one more. So just one more. This is Academy Sports and Outdoors, and this is one I can't remember if we've talked about it, Dale, just because I used to work here when I was a teenager many moons ago.
Oh, you mean
But
five years ago?
yeah, exactly, 5 years ago. But this is a great sporting goods company, team sports company. I've always preferred it to the sports authorities and the Dicks. And for those that remember Oshman's and Sports Smarts or whatever they were called, they've been around a long time. Also a base on base, but this one's actually making new highs. So
Yeah.
had time to kind of digest, kind of held
Yeah.
its own during this downtrend, and now it's already at new highs. And so this IPO is only since 2020. So
Okay.
just some ideas for the audience of those that may want to dip their toes into IPOs.
Yes, Anthony, he comments, yes, ASO, that was one you mentioned in your prior interviews. He also says, thank you, Kathy. You identified a few great companies last time, as well as these are some really fascinating looks. He monitors IPOs. So the best way for Anthony to thank you is to hang out with you in your service and not wait for you to be here every 3 or 4 months because the market, one thing for sure, is ever changing.
The market
So
is always ever changing. Yes,
yeah,
absolutely.
so this is how you find Kathy. And Kathy also co-authored a book. Have you read that? Anyone read Kathy's book that's interested in IPOs? So if some of the guys that are talking about a melt up in 6,000 S&Ps and they're right, and we do have a melt up, plenty of opportunities. And I don't know about you guys, but I rely on pros like Kathy to do the due diligence for me, because I really don't have the time to do it or the expertise to do it. And if I find someone credible in that arena, I, you know, I connect with them. So always rooting for you, Kathy.
Well, thanks, Dale. I really appreciate it. Anthony, thank you for your questions and your comments. And for everyone else, yeah, if you go to our website, you can hear there. We have the links to different videos myself and my authors have done. I'm on Twitter. You can also message me on LinkedIn. And yeah, it's always great to be here, Dale. You keep me sharp. Make sure I stay on
Well,
top of it.
iron sharpens iron, Kathy.
Yeah, there you go. Exactly.
So follow Kathy at KGD_investor, and be aware of things that people at cocktail parties would have no idea exists. And thank you, Kathy, for being here and sharing great looks and edifying our community and presenting nice opportunities for people to consider. We really appreciate your giving spirit.
Thanks, Dale. I appreciate you and your audience.
All right, Kathy Donnelly, everybody. And thanks again, Kathy. Bhavana loved it. So everyone, you could join the team in 21 minutes on the Morning Edge. Good luck today with the Fed, everybody. Remember, it's okay to do nothing. It is okay. There's no law that you have to trade the Fed. And as the team said, the markets will be here after the dust settles. Don't just count your pips or IPOs or gold coins, count your blessings, and I'll see everyone tomorrow. Adios. Thanks again, Kathy.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.